Hi traders, welcome to the Ken Tank, where you'll learn how to avoid getting eaten by the sharks on Wall Street. It's always all information for educational use only. I'm not making advice about what to buy, sell, or hold. Hello everybody, and welcome to this episode of the Ken Tank. In this episode, we're going to look at my top 3 favorite swing trading stock chart patterns, countdown style. So with number 3, let's get underway with a acceleration ramp, and that's where you've got a kind of a steady uptrend that all of a sudden gets more excited and moves up to a sharper angle breakout, especially valid or valuable when it occurs on a high volume breakout sequence of days. So you have a steady uptrend that all of a sudden kind of hockey sticks up or starts to get more excitement with more volume, and that kind of pattern tells you you've got emerging new volume. So if you'd gotten in anywhere during the first breakout, it's nicely up for you. We'll see if it continues in the upcoming week ahead as well, but this is the first pattern to look at, an acceleration ramp. Look for volume to confirm an entry. Next up, number 2. The next pattern is a 45-degree angle breakout, and that's where you've got a steady uptrend that channels tightly in a nice 45-degree angle type move. That'll often lead to subsequent price action breakout in the current chart. If we take a look at this one on the daily chart, you can see it's an especially strong 45-degree angle run for the last 3 months. And this is my favorite stock chart in the entire industry because it's gone from a low of 22 to a high of 42. It's gone up 20 points, almost doubling over the course of the last 90 days. Now, of course, this is one that I've alerted my SwingScans.com members to earlier. So if you're not yet a member of SwingScans, be sure to join so you can get these types of charts identified for you every single Saturday with specific entry triggers to learn from. But anyway, 45-degree angle breakout like this with a continuous, steady uptrend continuation makes a lot of sense for our current markets as well. And finally, leading our list at number 1. My favorite chart pattern, number 1, is gap continuations, minor gaps that continue. And even if you miss the first day of a gap breakout, you can just mark out the high of that day and then enter on a subsequent session. So minor gaps that continue are especially valuable because not only do they benefit from strong volume as evidenced by institutional buyers or professional traders buying this up, but you often get a subsequent set of additional minor gaps. And I've published articles on this in Technical Analysis of Stocks and Commodities, and I speak on these types of patterns at my live Money Show Traders Expo appearances. So certainly another good place to look at these types of patterns. But minor gaps that continue are the number 1 play in a professional trader's playbook. You take a look at another good chart here, area. Here's another example of an inside minor gap that continued. And if you look at the longer term chart on the 90-day, you can see every time there's a minor gap up, if you'd bought that gap up at 9.5 or 10, now it's all the way up to 13. Starting to fade back a little bit off the highs, but you get the picture. An uptrend continuation. Often you'll see a sequence like an acceleration ramp that then gets so excited it does a nice minor gap continuation breakout. And those types of patterns make for especially good trade setups and opportunities because you're going with institutional traders. So you don't have to worry about high frequency traders and algorithmic trading and dark pools and any of that stuff. All we care about is price action, and if we buy high, we could sell higher. And you could see a minor gap continuation run, especially good in this chart, ARIA, that's worked out nicely for the previous weeks and also recently with a minor gap here. So what the entry signal is to look at once it breaks previous resistance. So that would be in somewhere in this region and would have worked out really nicely for a swing trade. So to recap, those are the 3 patterns. Your acceleration ramp, so you get a steady uptrend that gets sharper on the breakout. The next is a 45-degree angle continuous uptrend. And the third is a minor gap, preferably in context of an existing uptrend continuation. So those are the 3 best charts to look at. Again, number 3 was CAB. You can see an acceleration ramp pattern there where it starts to move and then gets sharper for a big breakout later, as well as this earlier acceleration ramp back here. It had a steady uptrend that then moved up to new highs. So anytime you see that hockey stick type of a sequence, that makes a lot of sense. The next is a 45-degree angle breakout. LITE is this ticker, and you can see it's run up for 3 months in a row with hardly any pullbacks or problems. A nice tight trading range. That's why this is my favorite stock chart in the entire industry. Now, it may well sell off now, right? It may be at a high, so we don't buy right now. But it had been quite a big runner that I'd been telling my Swing Scans members about in earlier sessions. So that's the kind of chart you want to stay on top of. And of course, the other ones are gap continuations, right? Where you see minor gaps that continue on up to attract new buyers after the gap. So put those 3 in your playbook. I hope that they do well for you in your trades. Certainly like to see additional success stories from all of you. We got so many thousands of traders here at Trade Mastery and Day Trading University. It's good to see so many new faces on board. We like to keep things simple with the very best price action breakouts that are easy to follow and easy to trade. So until next time, best wishes for successful active trading. This is Ken Calhoun wishing you the best, and I'll see you in our next episode. Goodbye.